Hey everybody, Economic Ninja here. I hope you're doing well. I have to be honest with you, I'm extremely excited to do this video this morning because as I was preparing to do a video, I'm like, what am I going to do? I saw a story, and video is going to be about very important information you need to know right now about gold, silver, blockchain products, and cryptocurrency, right? And we're going to focus a little bit on this blockchain product that nobody realizes. And I believe that 90% of you, after watching this video, I would stick around to the end. That's not clickbait because it's going to take me a second to go from certain blocks of information and knowledge to bring you to this understanding at the end. We'll walk away, 90% of you, completely changed in the way that you look at certain things that are happening around this world and companies that are being built, and you don't have a lot of time because very soon you're going to see, well, it's actually already happening, wealthy individuals and companies buy up all these projects and you're not going to be able to be a part of them. Okay. This is very, very, very important. Now, I think every one of us, to be wealthy, you need to be like a Renaissance man. Does anyone know? Type 1 if you know what a Renaissance man means. We need to have a certain level of understanding of all different types of things when it comes to finance and money. I'm stuttering right now, but I'm really excited because I'm getting some revelation here. Type yes or no if you want to be wealthy. And what I mean by wealth is only the amount of, and you have to say it out loud. You really do. Wealth is determined by how long you can stop working and still live, right? Still make it. That's how wealthy you are. All right. If you were to leave your job today, would you be able to pay your bills next month and not work? That's how wealth is measured. And that's how people need to measure it. Well, this story came across my desk, and as far as being, it says here, as Bitcoin fades, they're talking about the price, right, or the excitement. Gold sees huge ETF inflows, silver sentiment soars, right? Because what you're seeing is one asset class sort of slow down in its exuberance, and then another one pick up, because there's always going to be a certain level of energy all around the world when it comes to finance, when it comes to human beings. When there's something not going well over here, one asset class, another one's exploding, right? It's because people are always trying to search for the next big thing, the next great thing. And what they don't understand is you need to become a Renaissance man. A Renaissance man knows a little bit about everything. Not exactly a professional in everything or one or two things, but they know enough about everything to be able to hold a conversation with everyone. Now, as people are coming on, I want you to understand, I'm doing this live, right? And I do these live because I have a lot of experience in capital markets, all types of different investments. I've studied, read, actually done. In this space, in YouTube, X, social media, 99% of the creators out there, especially the ones that come across, in their suits and stuff, and these highly edited videos, know nothing, and they have very little money in the game. I want to be very clear. Anything I've ever spoke about on this channel, I am doing 10 to 100 times more than you could even think about. That's not bragging. That's the truth. Whether it come to the dollar amount or the ambition level or the knowledge base or me trying to get that knowledge inside of me, I am doing it 10 to 100 times more than anyone around. Okay. This is why I go live. All right. I don't hide behind fancy editing. And I know this 100% because I've met hundreds and hundreds of creators over the years. Well, this story out of Zero Hedge talks about, in just, fancy charts and all this stuff, how crypto's going down and, gold and silver all of a sudden are coming up. Well, I think to be a wealthy person, you need to own gold and silver because of the frequency that they put off. I know this sounds crazy. Type 3 if you guys get it. Like, yes, they have a specific frequency. Everything does. But I know you have to have certain crypto and blockchain projects. Now, a lot of people do not understand this because there's like an insane amount of cryptocurrency and blockchain projects out there right now, and most of them are going to fail. But there is one class. They really break down into two classes because the third one is total crap, meme coins, junk things, and scams, right? But you have currencies that were built using blockchain technology, and then you have companies that have use cases that are using blockchain to record transactions or build a network. Okay, so those two are completely different. Bitcoin is different from, let's say, something like Theta. And no, I do not own any more Theta. I was a part of that when it started. I did some beta testing for them, things like that. I do not own them for a specific reason. Here's the deal, though. And let me give you an example. This is what's very, very important. And I don't think you could actually understand what I'm talking about unless you own gold and silver. I know it sounds crazy because you need to have a baseline frequency, a baseline understanding of monetary value and history, right? To be able to get this. Let me give you an example. I'm in my car right now. There's a navigation system right in front of me, right? Well, no, let me back up. When my grandfather became very wealthy back in the 40s, 50s, 60s, 70s, and then into the 80s before he passed away, he owned businesses. He owned a business, a hardware store. And then he turned around, he would take the profits from that store and he would go and buy stocks because he learned from his father, which was very wealthy. He owned a lot of farms because during the Great Depression, he owned all of his equipment and his land cash. And he was always warning all of his other friends that were getting leveraged. A lot of people don't understand this. Right before the Great Depression, all these mechanical tractors were coming out, and the only way you could get them was by leveraging against your farm to go buy these tractors to be more efficient. My grandfather said, "Hey, keep it slow and steady. Don't get leveraged. You're gonna lose your butt." And during the Depression, they all lost their farms. And my grandfather, to keep them busy, was actually going out and buying their farms or employing them either on their own land or on his to keep food on the tables. Well, by the end of the Depression, going into the 40s and 50s, he became extremely wealthy because he owned 10 times the farms, right? And he was a really good man. Well, was out buying stocks, and how my great grandfather bought stocks. And then my grandfather he'd go use a washing machine. He goes, Maytag. I love this washing machine. It makes my life easy. Well, if it makes my life easy, I'm going to buy the stock, right? Well, then that stock eventually would go up because he wasn't the only one with that kind of methodology. Well, even back then, a lot of those stocks paid dividends. As the company did well, the investors did well because not only was the stock going up, it was going up because the company was paying out dividends. Well, today, that's very rare. All right. Now, I think blue chip dividend paying stocks are excellent after a crash because they bring in a much greater yield than bonds, right? But this is why people buy bonds also. They're looking for a form of steady, reliable income. All right. So over time, these stocks have had less and less ability to pay out dividends because why would they? Because America, because of the dawn of computers, they start just giving up their dividends because there's more speculators, more eyeballs on these stocks. And the company's like, why would we give up our profits? We'll keep that for the board of directors and the C-suite execs and ourselves, and we'll just watch our stock keep going up. You see, in the past, because of a lack of technology, companies to get more value and get more people buying the stock and holding the stock, two totally different dynamics, right? When it comes to stock investing, to give it value, you'd have to give them something like a dividend. Well, they don't do that anymore because of computers, fast trading algorithms. There's so much speculating and greed now. The stocks go up more on themselves. The companies don't have to pay a dividend, right? All right. So now think about this. Right now, companies, and I'm going to use this example, like this satellite system in my car. It's run by Google, right? Google Maps. And there's another company that runs the actual back end, even though Google's been buying it all up around the world. All these towers all around the world, this mesh network. Imagine these little towers, like cell phone towers, all around the world, right? And they're all on, they're glowing, right? They've got electricity running to them, an internet signal, and they're all talking to each other around the world, right? And you've got that Google car running around with the mapping system that's out there mapping, and the car is speaking with all these towers. And there's tons of cars building this system, right? Well, those couple of companies, the GPS system and Google, they are out there selling stock to you and not giving you a dividend. They're not giving you anything. And I'm going to throw a link down to the Sale in the DeFi course right now. I'm going to say that now because I'm going to explain why I'm doing this. This is a big deal because they're going out and selling you worthless stock. It's the greater fool theory. You buy it for, let's say, $100 a share. Your goal is to sell it for 120 to the next fool, right? And then the next fool and next fool until there's a crash because of a market cycle and you have a bag holder. All right. They get to keep all of the money, the cash that comes in from you and I paying some type of fee. A lot of people sit there and they go, oh, it's free on my phone. It ain't free. You get charged somehow, right? That company gets to bring in money for you to use the map system. And what happens is you don't get any of that money. You spend the money, you pay, right? With either your attention or your time going to work, and then you take the cash and you hand it to them in some type of subscription, right? All right. Most people don't understand that. Okay, that it's not free. Even though you think it's free, you're paying for it somewhere. Okay. Now, there are companies right now, and I'm going to use this GPS as an example. There are companies right now that instead of selling stock on the stock market, and every time they got to raise money, they dilute the value. What they're doing is they are they're creating a certain amount of tokens, and they're tying it to a blockchain so it's immutable. It's trustless. You know exactly based on the code how many of these tokens are out there. So imagine them similar to stock, but they're not stock. All right, you don't own in the company. You're about to own a piece of a network. All right, and this is going away. This opportunity for you is in the next couple of years going to be gone. All right, I don't think you understand, because BlackRock and all these big companies are buying this stuff up, and they're manipulating markets to do it right now. Type 5, if you guys are getting anything out of this right now, I'm just curious because I know I'm excited about this. But these companies are building this network, and they're issuing a certain amount of tokens on a blockchain system, right? And what's happening is, let's use this satellite company as an example. They want to be able to sell this service like a GPS service that they think is really cool compared to Google. They got something different. So they issue these tokens and they sell them out through either an ICO or a private company. I don't want to get into that right now, how that works, but they sell them out in the network. So then there's thousands and thousands of people that have some of these tokens. Well, what these tokens do, they give utility and purpose behind the network, because what they say is like, look, as we build our company, as we start to put more of these, what are they called? Thank you for the super chat, but I keep going. These nodes, these towers all over the world, right next to the Google towers. This is what we're gonna do. As people, we start selling the service, and we say, hey, would you like to use our GPS? It's $9.99 a month. And they start pulling in money, right? What happens is then they start to, and what they ask you is, hey, you own some of these? We want you to take your computer and run this little piece of software on your computer, right? Because this is what's going to hopefully blow 90% of your minds. There's actually not a tower sitting next to the Google tower. The one where you'd go outside and there's this big tower and there's this ball up there and it's actually doing stuff. It's not. What it is in your car or on your phone or at your home, there's this little box, right? This piece of hardware. And that's the new tower, because technology has changed. And what's happening is they go, hey, if you will stake this, right? Or use this piece of hardware and run a node using your little bit of electricity, which is nothing, and your internet connection, what we're going to do is we're going to use 5 of those to replace one of those ugly towers that Google's got, right? And then what we're doing is we're building our own mesh network all around the world. And as we start selling the service to the user, you're going to get money put into a wallet because you're holding the network up. It's a decentralized network. And for the first time ever, think about this. Instead of paying a dividend, let me go back in time to where, let's say Maytag was like, hey, we had a good year, so we're going to pay a dividend to all of our shareholders in the form of US dollars. Now, what's going to happen is, imagine, and I'm going to try and keep this really baseline level, you are going to get paid in a token that also can go up or down in value based on network adoption. Guys, type 7 if that just made sense to you. And I hope this makes sense to you, because what I'm explaining to you right now is a way of investing that is so different. It has never happened before. I have been investing in these companies. As a matter of fact, my DeFi students are about to find out about one of my picks. And this one that I'm about to show you, I've been owned for almost 10 years. I was one of the first investors in this company. And they've now got a viable product up and running, and they're going to start selling it. And I personally believe it is going to go through the roof in the next couple of years. It has done barely anything since I've owned it. But what's happening, I've been watching this company build and build and build like a Silicon Valley company. And they're going to allow everybody to run this network and get paid. This is not like Bitcoin mining. This is owning part of a network. It's not the stock in the core company that built the network. It's owning a piece of the network and getting paid in those network tokens. This is completely different. And the thing is, there are a lot of scams out there. I've been investing in this since 2017 and finding what I believe to be the blue chip companies of the crypto blockchain industry. And that's what I'm going to show my students. Look, here's the deal. That deal's going to end soon because we're going to shut it down again because another coin pick's coming out. And I'm not, it stays with my students. We're now going to once a month live Q&A calls for my students as well, because what I want to do is set every single one of you on a path of success, because there are so many scams out there, but it takes so much time and effort for me and Dylan to do this. That's why we built this DeFi class, which is turning into a master class. If you guys want to be a part of it, the link's down below. But I wanted to give you all this information because there are companies right now that if you buy their token and you run a full node or a partial node, or you simply stake on their system, they're trying to build the next Google. But instead of selling shares and going that route through the SEC, they're doing it a different way. You see, this is what the SEC is so freaking out about, because the SEC is on the payroll of BlackRock, Blackstone, and all these other guys. Does that make sense? Type 11. These big companies do not want you owning this stuff. So what they're doing is they're creating these crashes. They're doing it with XRP. I wish you guys understood. And here's the easiest way to prove what I'm saying is completely true. All you have to do is I want you to go to the XRP ledger or the XRP rich list. I want you to look at the top 200 wallets. And all I want you to do is get a screenshot, snap a shot of it today. Just copy it, print it off. Then I want you to see those top 200 wallets and how much they own. And then I want you to see, as if XRP drops again, which I believe it could, because Bitcoin, its next support level is like $73,000, $74,000, right? Bitcoin dips down to that. XRP is going down to 180, 160, right? I know a lot of people don't want to hear that, but stop whining. Trust me, I've seen paper losses personally. I ain't crying. I'm buying. Just do that, man. Hey, if you ain't crying, you're buying. If you're one of those, if you know what's going on right now. But my point being is that all you have to do is take that snapshot. When XRP dips again, I want you to take another snapshot and your mouth's going to drop. Because you know what's going to happen? The richest people in XRP, they're going to buy more. BlackRock's and all these big companies, they're shaking you out. And when I'm talking about these crypto projects where you could actually own pieces of networks of companies, think about this. During the Silicon Valley boom, right, of the 90s and the not early 2000s, it completely imploded by 2000. People took risks. You'd buy a stock like JDS Uniphase, right, a Silicon Valley laser company, which I owned. You'd buy that stock. It opened at $2 in, like, I want to say it was 1994 when that stock came out, when it IPO'd, and it was $800 a share in the year 2000, right? Well, that was a risk because that company could have collapsed. Their lasers could have sucked, and then it could have collapsed. You could take that risk. This is exactly what's happening now. But JDS Uniphase, it went from $4 or $2, whatever it was, to 800. They never paid a dividend to me. I never got a dividend. But now you're taking the same risk with certain companies out of Silicon Valley. This is happening right now in front of your eyes. But instead of buying a stock, a worthless stock, you could take this own part of the network and do something using your electricity and your internet, or staking something, and get a daily, monthly dividend right now paid out in that network token that could also go up. So can you imagine JDS Uniphase? I buy it at $4 in 1994, and their company's kicking butt. And every day or every week or every month, they're like, hey, just because you own this, we're going to give you a little bit more. We're going to give you an extra share today. Tomorrow, we may give you 2 more because you're helping us build this network, right? We couldn't have done it without you. But they're not paying you in dollars. They're giving you another share and then another share. And as that company goes up, holy cow, it's not my initial 1,000 shares that I bought at $2 a share, let's say in 1994, that are worth $800. Oh no, instead of 1,000 shares or whatever, I've got like 10,000, because over that amount of time, they kept putting shares in my account. Just, is this getting through to some of you right now? Type yes if you're like, no, I didn't think of it that way. Now, this isn't the case with all these projects. There's a lot of vetting, a lot of research, a lot of work that goes into them. But you got to sit there and go, well, am I going to listen to a financial advisor? Because none of this is financial advice. I can't give that to you. You know, and hey, the truth was, I was a millionaire when I was in my mid-20s, and I just kept crushing it. Did I go through waves of losing? Yes. Am I back on top? Yes. Like in 2017, holy cow. It was insane. Going from $10,000 investment to $1 million. I'll never forget it. And now it's like, oh, geezo, you know? And I want every single one of you guys to get it. But if you don't get it, you're not going to get it. If you guys want to be a part of the crypto DeFi course, I'll promise to knock your socks off. I want to bring you so much value. It's crazy. That's why me and Dylan decided yesterday to just say heck with it. We're doing once a month group coaching calls and Q&As for the next few months at least until we start to get into a downturn. Then I'm still going to be doing those and saying, hey guys, I'm getting out of this, I'm getting out of that, blah, blah, blah. And we're changing up our strategy because right now you're in mostly speculation. Well, anyway, I hope you guys have an awesome day. I got to get going because I'm flying to somewhere to go talk to a bunch of Ethereum developers. I hope you have an awesome day. Links down below if you want the sale. And we'll talk to you later. Ninja is out.